On today's episode of the Cryptoverse, I have three items I would like to talk to you about today. The first one is that a reasonably large amount of Ethereum Classic has been double spent in a successful 51% mining attack. So I'll communicate that to you through the lens of a crypto investor, because that's one of the things I see missing from the overall commentary on this story. So Bitcoin has also formed two consecutive chart patterns that are both bullish. So that's good news. One of them happened on the daily chart, one of them happened on the hourly chart, so I'll show you those. And Coinbase has now banned both Gab, the social network of the company, and its founder from their platform, highlighting the dangers of centralisation. So if you would like to earn your share of the viewer rewards or the listener rewards, check out the website, thecryptoverse.show. If you click on the big blue button in the top right-hand corner, that'll take you through to where you can become a supporter of the show and cryptocurrency rewards and get rid of the ads all at the same time. For now, though, we're going to get into these stories. So this Ethereum Classic double spend then. You've probably heard of this by now, but I wanted to give you it through the lens of a crypto investor. So ironically, this double spend thing where you spend the same money twice, hence the name, this is exactly what blockchain technology is supposed to prevent. The whole idea of having a consensus network and a distributed ledger is so that we can track everyone's account balance and you can only spend the digital money once. This is also why mining power is often spoken as securing the network. You often hear people say that, right? The purpose of miners in these proof of work networks is miners secure the network, people say, right? It's not security in terms of the encryption. It's security in terms of preventing these double spends. Now, I would say one of Bitcoin's biggest USPs, unique selling propositions, is the amount of mining power that it has. Bitcoin's mining power eclipses every other network by orders of magnitude, including Ethereum and Ethereum Classic. So that gives investors confidence in Bitcoin, because the chances of someone double spending Bitcoin by doing a 51% attack is so minuscule. It's such a low risk. Whereas with these smaller coins like Ethereum Classic that have much smaller mining communities, they are within range of someone accruing enough mining power to double spend it, evidently, because it's just happened. Now, question, as a crypto investor, you're like, okay, so it's happened to Ethereum Classic, ETC, and Ethereum ETH. They both use the same mining algorithm, which is called Ethash. So does that mean that Ethereum ETH is at risk of a double spend situation like this? Not really, because Ethereum ETH has like 17 times more mining power than ETC. So technically you could perform the same attack, right? But you would need 17 times more mining power, which is 17 times more expensive, and so on. So I've also got something else to talk about on that as well, which is, ironically, the Ethereum ETH core developers, they've recently expressed their intention to change the mining algorithm on Ethereum. So right now, ETH and ETC, Ethereum and Ethereum Classic, they both use this Ethash mining algorithm. Well, the Ethereum core developers, they live stream all their calls, and they were talking recently about changing it to this alternative mining algorithm. It's called ProgPow. So prog as in program and POW as in proof of work. So the idea here is to buy them some more time until they switch to proof of stake. And this would be another hard fork to change to ProgPow, which is proposed for like a few months' time. We've got the Constantinople hard fork happening on the 16th of January. That's a separate thing to prepare for other upgrades to the Ethereum network. We've got another one in October planned for 2019. But in between times, there's probably going to be another hard fork to change the mining algorithm from Ethash to ProgPow. And so, back to investors again. As investors, well, we're still in this phase where we're learning how to value these crypto networks. They're not companies. They don't obey the same rules, and they don't operate the same. They don't have dividends, they have shareholder meetings and so on. So we're still trying to work out how on earth you value these tokens. So one of the metrics to take into account when you're thinking about investing in any given crypto asset is its consensus mechanism. So if it's a proof of work network, then the hash rate is an important metric, and more hash power means lower risk from 51% attack, because the hashing power is protecting our investment. And that's really where the big gorillas like Bitcoin and Ethereum are lower risk investments in terms of risk against the 51% attack and a double spend. What's odd about a 51% attack is that it's supposed to be prevented on the basis of game theory. So the theory goes that if you double spend a coin, well then that would freak everyone else out in the network, and it would actually tank the price of the token that you double spent. So in this case, I think it was something like $500,000 worth of ETC was spent twice. So okay, so you gain $500,000 worth of value. The trouble is that the theory goes that when you do that and word gets out that you've double spent ETC, you crash the price, and then that $500,000 worth of ETC could be worth nothing because you just spooked the network and caused the price to go to zero. That hasn't happened, right? The ETC price has remained reasonably stable given that this 51% attack has happened. So on that basis, this is why BTC, Bitcoin, is the undisputed king, because the chances of a double spend from a mining attack is just slim to none, because it's just so much mining power. I already said that ETH, Ethereum, has like 17 times more hashing power than ETC, but Bitcoin's is like thousands of times beyond that. So that, in terms of store of value, Bitcoin's the undisputed king. Let's now move on to Bitcoin and its price chart patterns. It broke out of a wedge, and then it formed a classic flag pattern, both of which, in my view, are bullish. So I'm going to go over to TradingView here, and I'm going to show you first the 1 hour chart from Coinbase. So here we go, big old wedge on the 1 hour chart. Now this entered in a bullish direction. So the beginning of this wedge was in an upward direction. So on the balance of probabilities, it will resolve in the same direction. That's what my Forex mentors taught me anyway. And in this case, boom, off it went, broke right out of the wedge, and then is hovering above $4,000. So pattern number one is the wedge. Pattern number two is the flag. So let's draw this here, flag right in front of you in real time. So here is the flagpole, which I'll put in yellow. Just need to turn off the extension here, otherwise it's not going to look very good. There's the flagpole on the big pump candle. Here's the actual flag body, and the top of the flag body and the bottom of the flag body. There we go. Lovely job. And again, this is a sort of a bullish flag, so my expectation, again, just on the balance of probabilities and just the way we learn technical analysis, this should resolve in this direction to the bullish side. And the fact that it's sort of bouncing off the $4,000 mark is a good sign. So there's three patterns here. There's the bullish flag, there's the wedge, there's actually another one. So let me just delete all of that, what I just did. You can draw that yourself if you want to, just by copying the lines that I just drew. But on the daily chart, so they were both on the 1 hour chart. On the daily chart, if we go down here, I'm actually going to have to delete my wedge here for this to make visual sense. So let me delete it. What we've got here is a classic inverse head and shoulders. So what we've got, let's just draw it from here. Again, these when you learn technical chart patterns, they always look so perfect on paper, but in the real world, you need more of a trained eye to spot them because they're never as perfect as you learn them in the classroom, right? So there's a shoulder, there's a head, and then if I draw this up you can draw this any which way, I suppose. You could take these highs or these highs. I'll just take these ones. It works either way. And I take this down to the other shoulder. And then ordinarily, for this to fully form, it would go like this to the upside. And then when a head and shoulders pattern resolves, they say, we say that it breaks the neckline. So if I now get a dotted line and let me turn off the magnet. So the neckline is like that. It could be here where you look at the shoulders. So this is good. If you draw it on the shoulders, actually, it looks even better. So one shoulder gets formed, the head is below the shoulder, second shoulder forms, and it's the second shoulder setting a higher low according to the first shoulder. So that is actually very nice. It is looking pretty good there. Granted, the right shoulder here isn't as steep as the first one. However, the fact that it's bouncing off a higher low set by the previous shoulder, that is the daily bullish reversal head and shoulders that I've picked out there. Looking pretty good. Also now pulled above the 20-day moving average on the daily, providing some support as we grind upwards here. So that's looking pretty good. I'm quite pleased by that. Very pleased. So we've actually got a whole confluence of factors. Reverse head and shoulders on the daily chart, bull flag, breakout to the wedge, and now holding support at 4,000. So those are 4 bullish signs in Bitcoin. So I'll leave it there. They're pretty good, right? And you can, if you want to learn how to do this stuff, by the way, you can check out my course called The Master Crypto Trader, which is at Cryptoversity. If you go to cryptoasset.school, click on Learn, there's a course there called The Master Cryptocurrency Trader that doesn't just include lessons on technical analysis. It'll teach you a whole trading system about how to spot all these kinds of things. In fact, my students, that big pump out of the wedge, they caught that because, as you'll see here on Twitter, on the 6th of January, it was like 10:50 a.m. The wedge was forming, and I posted this in the private chat before it broke out, and I drew this yellow arrow saying this is on the balance of probabilities how it's going to resolve. And then sure enough, 7 hours later, boom, the flagpole formed with a 7% pump in a single hour. So, and that happened at 6:10 p.m., 10 past 6 in the evening. So that was nice. The fact that I pulled out those TradingView screenshots and they were timestamped, so they were in the private chat group. So that's the kind of thing you get access to as well. If you join Cryptoversity as a student and take the course, you also get access to the private chat, and I post stuff like that every so often. Moving on to the final story then, this is just a short one. Coinbase bans Gab, the social network, and its founder. We already know that Gab was banned by Coinbase merchants. So Coinbase provide crypto payment processing, and you can see here, Gab tweeted this out a few days ago. They're saying, as predicted, the on and off ramps exchanges are starting to censor not only companies but also individuals. Coinbase has now banned both Gab's merchant accounts, so they can't process crypto payments through Coinbase Commerce, and now Andrew Torba, his personal account, Andrew Torba being the founder of Gab, his personal account has been banned. It just says, unfortunately, we had to close your Coinbase account, but it doesn't really give an explanation or appeals process or anything like that. It just says, empty your Bitcoin wallet and bugger off. So that's that. So that's why, we need to move to systems like BTC Pay, where you become your own payment processor. This is what I did when I saw Gab having a spot of bother. I want to mention this because I strongly believe every content creator in the crypto space should be using BTC Pay to collect crypto payments, in just at the very least to protect your privacy. So what does that mean? If you go to the video description of someone's YouTube video and they show like a single Bitcoin donation address, or they display a QR code in their video, if they're using the same Bitcoin address over and over and over again, that's a risk to not only their privacy but your privacy. Because if the minute you donate to that address, that then links your address to that address, and then you've got a record on the blockchain. The difference with using BTC Pay Server, you can check this out, use my donation link in the video description. You can donate anonymously because I don't collect any personal information, no email address, no nothing. But also, because it's powered by BTC Pay Server, it's generating a brand new receiving address for every single click on that link. Where someone wants to donate crypto, it generates a brand new Bitcoin or Litecoin address. Even if you don't end up paying the little invoice that it creates, if it expires, that address will never be used again. So when you donate whatever it is, 50 cents to me or whatever, that address will only ever be used once for that address. So it completely breaks the traceability of that transaction. So that's just one thing to look out for. You don't know what you don't know until someone shows you, as one of my mentors always says. So That's why I believed that it was my responsibility, at least as a content creator, to do whatever I need to do to protect your privacy, even if you don't know this kind of stuff. It's still my responsibility, if I know that, to do everything I can to protect your privacy. So that's why I don't collect information when you donate money. It's also why I don't collect any personal information when you sign up to Cryptoversity as a student. I mean, in reality, I don't need any personal information to deliver my online courses, right? All I really need is a name. Don't really need that. So you can put any name in you want, and an email address, which could be anonymous as well. The only reason I need that is to communicate with you about course updates or things relating to your account, but I don't know who you are, right? And if you pay with crypto to Cryptoverse, you are completely anonymous. There is absolutely no need. I can deliver the service of the online courses simply by just giving you online access to it. And that's just an email, a name, and a payment. That's it. So to me, that's congruent. If I believe in privacy and sovereignty and all the rest of it, it's hard. It's hard work, to be honest, to do all this sort of stuff. But I suppose I'm setting an example is what I'm trying to do with that. Anyway, that's all I've got for you today. If you like this episode, go ahead, hit that like button. If you really liked it, hit that subscribe button. And also, you absolutely have to check out the latest course that I'm putting together. It's called Crypto Exchange Mastery. It's currently in production. I think I'm 10 lessons in so far. So it's available now. You can sign up and get access to it immediately. And all the lessons I've created so far are in there. And as I create new lessons, which I'm doing almost on a daily basis, they appear inside the members area immediately. But this is becoming the best course I've ever created, hands down. I'm so proud of it. So I really do want to get it in your hands because I think you'll really enjoy it. But that's all I've got for you today. I'll be back with the next episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.